I always say tariffs is the most beautiful word to me in the dictionary. Tariff.
Doing very well. We're resetting the table. We're going to make our country very rich, very, very rich. It's already happening.
The United States into a manufacturing powerhouse like it used to be many years ago.
Teeters on the edge of a potential global recession.
The world's busiest trade route just froze, and America is in deep trouble. In April 2025, the U.S. slammed China with a crushing 145% tariff, freezing billions of dollars in trade overnight. Now, $90 billion worth of goods are stuck at sea. Boeing's stock is crashing, and China's busiest ports are packed with cargo no one can move. From electric cars to smartphones, prices are about to spike. Even Donald Trump, known for his hard stance on China, was reportedly stunned by the fallout. This isn't just a trade war. It's a full-blown global shipping collapse. And if you think it ends at the ports, wait until you see how it's about to hit every part of the economy. It all started on April 7th, 2025, when the U.S. government hit China with a massive 145% tariff on a wide range of goods. From electric vehicle batteries to solar panels and semiconductor parts, the cost of importing critical products exploded overnight. Within 72 hours, China struck back, raising tariffs on American planes, farm products, and technology. Ports across Asia saw cargo traffic drop by 10% almost immediately, while shipping rates to the U.S. jumped by 25%. Major shipping companies like Maersk even began rerouting vessels, warning clients about growing delays. Experts from Morgan Stanley called it economic self-harm on both sides. Factories in America that depended on Chinese parts started reporting shortages by mid-April. Retailers and automakers scrambled to adjust supply lines, but the damage was already spreading. This wasn't just a warning shot. It was a direct hit on the global economy. And the real nightmare wasn't at sea. It was about to hit America's ports harder than anyone expected. As the tariff war exploded, the impact on shipping was immediate and brutal. Chinese exporters, afraid of facing massive new tariffs or product rejections, began pulling shipments to the U.S. port operations slowed to a crawl. At the Port of Los Angeles and Long Beach, the congestion index spiked by 40% within just 2 weeks. Satellite images showed the Yangshan port in Shanghai backed up for miles, with hundreds of container ships stuck offshore. By mid-April 2025, more than 500 ships were stranded across major Chinese ports, with nowhere to go. Companies like Maersk issued warnings about unpredictable delays and rising freight costs. Average shipping times from China to the U.S. West Coast doubled from 18 days to over 36 days. Warehouses across China overflowed with goods that had nowhere to move. America's factories, built on just-in-time delivery, faced growing shortages by the day. Car plants halted production lines. Electronics companies delayed shipments. What started as a tariff battle was now a full supply chain freeze. And if the ports were clogged, the next place to feel the pain would be even worse: America's store shelves and production floors. By mid-April 2025, America's store shelves were already feeling the pressure. U.S. import volumes from China had dropped by nearly 14% in just 2 weeks, according to FreightWaves. Major retailers like Walmart, Best Buy, and Target reported growing delays on essential goods, from laptops to refrigerators. Apple warned that iPhone shipments could be delayed by up to 6 weeks due to supply chain gridlock. Gaming consoles like PlayStation 5 and Xbox were quickly selling out with no restocks in sight. The average cost of imported electronics rose by almost 12% in 3 weeks. Clothing shipments slowed sharply, with brands like Nike and Gap cutting summer inventory forecasts. Families preparing for back-to-school shopping faced higher prices and fewer choices on shelves. Inflation, which had been cooling earlier this year, reignited across electronics, clothing, and household items. Every missing shipment wasn't just a problem for big companies anymore. It was now a daily crisis for American households. And while shoppers struggled to find basics, the electric vehicle industry was about to suffer an even bigger shock. While shoppers were worrying about empty shelves, a much bigger storm was brewing inside America's factories. The electric vehicle industry, once the pride of America's future economy, started crashing into a wall. Tesla, Ford, Rivian, and GM were hit hard as shipments of critical components collapsed. Wiring harnesses, battery modules, sensors, and semiconductors were stuck offshore or trapped under massive tariffs. Tesla warned that Model 3 and Cybertruck deliveries could be delayed by up to 4 months. Lithium carbonate prices, the key material for EV batteries, spiked by 15% within a month, pushing production costs even higher. Ford paused production at 2 EV plants due to missing parts. Rivian slashed its 2025 delivery targets by 20%. Car makers rushed to find alternative suppliers in Mexico, Vietnam, and India, but experts warned that qualifying new parts could take years. What was once a booming EV revolution now faced its first major supply chain ice age. And while the giants scrambled to adapt, smaller EV startups were heading straight for disaster. While the major automakers struggled to adjust, smaller electric vehicle startups faced a brutal reality. Companies like Lucid Motors, Fisker, and Lordstown Motors, already burning cash, were pushed to the edge by shipping delays and soaring parts prices. Without stable supply chains, production slowed to a crawl. Lucid warned investors of a 30% cut in its 2025 delivery targets. Fisker halted production for 2 weeks due to missing battery components. Lordstown Motors, still recovering from financial struggles, laid off 15% of its workforce in April alone. Access to funding dried up as investors fled the risky EV market. Experts warned that many smaller brands could collapse within 18 months if the crisis continued. The same parts shortage that hurt Tesla and Ford was fatal for companies without strong financial backing. Dreams of challenging the giants were slipping away fast. And just as the EV sector cracked, another massive blow was about to hit America's skies. While the EV industry was still scrambling, America's biggest exporter was already crashing. Boeing, a pillar of U.S. manufacturing and national pride, was hit hard as China canceled over $20 billion worth of aircraft orders almost overnight. More than 55 brand-new jets were grounded with no buyers, sending shockwaves through the company. Boeing's stock plunged by $9 billion in market value within 2 days. Thousands of jobs tied to Boeing's supply chain were suddenly at risk, from factories in Washington to parts suppliers across the Midwest. Industry experts warned that the loss of the Chinese market could set Boeing's recovery back by years. To make things worse, China shifted some of its future aircraft orders to Airbus, Boeing's biggest European rival. This wasn't just a lost sale. It was a shift in global aviation power. Boeing's problems also rippled across the tech and defense sectors, where rare materials for jets overlap with electric vehicles. And if Boeing's fall shook the skies, America's rare earth supply was about to take an even bigger hit. While Boeing's collapse shook America's skies, a deeper and even more dangerous problem was building underground. China, which supplies nearly 60% of the world's rare earth minerals, announced a 25% cut in rare earth exports to the U.S. in April 2025. These minerals are critical for building electric car batteries, fighter jets, wind turbines, smartphones, and satellites. The impact was immediate. Prices for neodymium jumped by 22%, while lithium prices surged 18% within weeks. American automakers, electronics firms, and defense contractors scrambled to find backup sources. But options were thin. The U.S. rushed to sign emergency supply deals with Australia and Canada. But experts warned that new mining and processing projects could take 5 to 7 years to fully ramp up. Without rare earths, America's ability to build EV motors, F-35 fighter jets, and next-generation tech was at serious risk. This wasn't just about higher prices. It was a potential national security crisis. And while Washington scrambled for short-term solutions, China was already rewriting the future of global supply chains. With rare earth supplies under siege and shipping routes frozen, America had no choice but to fight back. In a scramble to protect its future, Washington launched the biggest industrial rebuilding plan in decades. The Biden administration unleashed massive spending programs to rebuild critical industries at home. The Inflation Reduction Act set aside $369 billion for clean energy and manufacturing projects, while the CHIPS Act pumped another $52 billion into domestic semiconductor production. Major corporations like Tesla, GM, and Apple accelerated friendshoring strategies, shifting their supply chains toward Mexico, Vietnam, and India. Tesla's new Gigafactory project in Nuevo Leon, Mexico, broke ground in early 2025. Meanwhile, U.S. imports from China plunged by 18% in April alone, marking one of the sharpest monthly drops in modern trade history. But experts warned the shift would be painful. A McKinsey report predicted consumer prices for electronics and vehicles could rise 15 to 25% by 2026. Boston Consulting Group estimated that fully rebuilding critical supply chains away from China would take at least 7 to 10 years. Higher costs, longer delays, and more fragile production networks were becoming the new normal. The age of fast, cheap global trade was collapsing in real time. And while America bet billions on building new factories at home, a political firestorm back in Washington was threatening to rip those plans apart. The world's supply chains are breaking apart, and the fallout is only just beginning. Subscribe now to stay ahead, as this global shift reshapes everything from factories to your daily life. Share this video to keep others informed, and join us for more critical updates on the future of global trade.